Every so often, the financial news erupts with a dramatic phrase. A stock or the whole market has just formed a golden cross. It sounds almost mystical, like a sign of guaranteed riches ahead. Today we strip away the drama and learn exactly what a golden cross is, what its dark twin, the death cross, means, and the crucial catch that the headlines never mention. To understand it, we need two of the moving averages we have already met, a fast one and a slow one. The standard pair is the 50-day moving average, which tracks the medium-term trend and reacts fairly quickly, and the 200-day moving average, which tracks the long-term trend and moves very slowly, like a heavy ship. A golden cross is simply this. The moment the fast 50-day average crosses up and over the slow 200-day average. Picture it. For a long time the stock was weak, so the fast line sat below the slow line. Then the stock recovers, gains strength, and the fast 50-day climbs until it punches up through the 200. That upward crossover is the golden cross, and it is read as a powerful signal that the long-term trend has officially turned bullish. Now meet its dark twin, the death cross. It is the exact mirror image, and the name tells you the mood. A death cross happens when that same fast 50-day average crosses down below the slow 200-day average. The fast line falling under the slow line says that medium-term momentum has now decayed below the long-term trend, a signal that a serious, lasting downturn may be underway. Golden cross up, death cross down. So why does everybody care so much? Two reasons. First, it is a clean, simple, unarguable definition of a major trend change, easy to see and impossible to fudge. And second, precisely because it is so famous, enormous numbers of investors and institutions watch these exact two lines. When the golden cross hits, money flows in partly just because everyone agreed in advance that it matters. The signal carries a little real, self-fulfilling weight. But now the catch, the giant asterisk the breathless headlines always leave out. The golden cross is extraordinarily slow. It is a deeply lagging signal because it is built from a 50-day and a 200-day average, both of which look far into the past. By the time the fast line has finally dragged itself up through the slow line, the stock has very often already risen 30, 40, sometimes 50% off its lows. The party started long ago, so you must understand what kind of tool this really is. The golden cross is not a precise entry signal that tells you the perfect moment to buy. You will never catch the bottom with it, not even close. What it is a confirmation of a regime, a broad statement that the long-term character of the stock has shifted from bearish to bullish. It is a weather report about the season, not a timer for the next hour. And like every moving average tool, it has a clear weakness. In a choppy, sideways, directionless market, the 50 and 200 lines can tangle together, crossing back and forth, producing a string of golden crosses and death crosses that all fail almost immediately. These whipsaws can lure you in and stop you out again and again. The golden cross shines after a real, sustained downtrend ends and frustrates everyone during a flat, going-nowhere market. So how does a sensible person actually use it? Not as a magic by button, but as one piece of broad context. A golden cross on a major index can tell you the overall environment has turned friendlier, that you're now investing with the long-term wind at your back rather than against it. It sets the weather, and you make your specific decisions using your other tools within that weather. And now the honest, and then you can say along with me. The long-term index investor, buying a little every month no matter what, does not need to wait for a golden cross or fear a death cross at all. They're already invested through every single one of them, capturing the whole recovery automatically, including all that early gain the lagging cross would have made them miss. The crosses are a story for traders, not a requirement for builders of patient wealth. So the next time the news breamlessly announces a golden cross, you will know exactly what it means and what it does not. The fast 50-day has climbed above the slow 200-day, confirming the long-term trend has turned up. It is real, it is widely watched, and it is also very late. A useful description of the season, never a crystal ball for tomorrow. I'll see you in the next one, where we compare arithmetic and logarithmic charts. Until then, keep it simple and never trust a cross to be a crystal ball.